James Liu is Clearnomics founder and CEO. And James, I want to pick up on that conversation we just had with David, looking at where the unemployment claims or initial unemployment claims came in today. Slightly lower than what we had last week, but certainly holding steady there. How much of this do you think has to do with the fact that businesses are starting to rehire? How much of this is just workers who applied for benefits back in March that are now starting to reach that 6-month limit in specific states?
Well, hi, Akiko. Yeah, well, I guess what we see with the jobless claims and really the labor market data in general is that you have two different parts of the economy right now. One part where you had furloughed workers that were able to come back starting in, let's call it May, after a horrendous March and April. And then you have a different part of the economy, the service sector, restaurants, airlines, of course, who are looking for additional aid right now that are still suffering. So you have this have and have nots sort of dynamic. And I think the key for investors right now is that many parts of the economy can in fact recover, as we've already seen. And so when we talk about things like additional stimulus or what the Fed can and can't do, or where a vaccine will help, it really is for that part of the economy where you have to have face-to-face interaction, you have to be in person. And so you have this divergence within the overall economy and in the market right now.
So you're saying there are parts of the economy that can recover, I think in your notes, say even without the vaccine in place. Why aren't we seeing more of that momentum pick up? Is it really just about the stimulus?
Yeah, well, I think that's right. So I think the big picture view is that a lot of investors and economists have their hopes pinned on a vaccine. And there's sort of this binary event. Once we get that vaccine, everything will kind of be back to normal and everything will be copacetic, basically. And we're not sure either that that's correct. It will take time for a vaccine to be rolled out and to prove its efficacy, if it even is efficacious overall for the overall society. But more importantly, I mean, many parts of the stock market, as we know, have already started to make new highs. They've bounced back. And it's exactly because although we had stimulus checks and we had funding from PPP, for instance, that also coincided with many parts of the economy simply opening back up again. And so if you're a type of business, let's say in tech, in services that can be remote, in let's say some parts of financial services where you can operate remotely, we have seen those areas of the economy already bounce back. So I think it's less about let's wait for a vaccine and wait for everything to simply open up again and get back to quote unquote normal. It's about picking and choosing those areas of the economy and parts of the stock market in order to have a strategy, even if there is no vaccine at the end.
Speaking of the market, the same question I asked our previous guest, why do you think that the reaction to the Fed's statement as well as Jay Powell's comments were so negative? I mean, I'm looking at where the Dow is. It's coming off of its lows now, but it was down well over 200%. I mean, 200 points, 200 points. Are you surprised by that reaction, given how the central bank messaged where things were going, or is this a question about the credibility of the policies in place right now?
Yeah, I think that's the most important point, Akiko. So it's not unusual to have negative market reactions right after Fed statements and announcements. Even the emergency actions that the Fed took back in March to push rates down to zero, the immediate reaction from markets was often negative to those events. So I think it's more important to think about what the Fed can and cannot do at this point. The Fed, it made sense for them to be the focus in March and April. And it also made sense back in 2008 for them to be the focus when the question was financial stability. Can the financial system continue to operate? And at this point, it's a very different story. The question now is, will the Fed continue to support the economy? And really, it's up to the economy to get its own footing. And so it is kind of surprising to see the narrative right now, at least over the last 24 hours, that the Fed basically underwhelmed. Because when you look at the Fed forecast, everything was upgraded. GDP, unemployment, inflation, you name it. And if the GDP forecast does slow down, that's only because it's supposed to do much better than expected over the next several quarters to begin with. So overall, we think the Fed is still telling the same story. They're really hammering home on forward guidance. Jay Powell used very strong language in both the press conference and in the statement. And so we think that overall, the Fed plays some role in the markets, but they're probably not the main area of focus that investors should be looking at right now.
James, having said that, there are still questions about just what this new inflation framework means. And on that point, you look at the Fed's own projections, core inflation remaining below 2% until 2023. So while the Fed's talking about overshooting, we're not even talking about even getting there by the Fed's own projections. So why go why have that framework in place? Why not shift its policy in other areas?
Yeah, that's really the key question right now for the Fed. I mean, basically what the Fed is saying, especially with the changes they've made over the last month, is that they're going to let inflation ride out much longer than they may historically have. And really all that points to is just how dovish the Fed is willing to be. Not just this Fed, but also the Yellen Fed, since 2009. Very hesitant to increase rates, to stifle, nascent economic growth and labor market recoveries. And I think ultimately the point is that the Fed has essentially done everything it can traditionally do under normal circumstances and with the tools it developed back in 2008. And so really it does come down to fiscal policy, as Chair Powell had reiterated. And in general, I think what investors should be looking at is less, what is the Fed going to say this meeting or the next meeting? It's really what parts of the economy can really bounce back. And obviously, if there is fiscal stimulus and a public health solution, then that's icing on the cake at that point.
Good takeaways there. James Liu, Clearnomics founder and CEO. Always good to talk to you.
Thanks, Akiko.